Hi, so I want to give you an overview or an idea of what a CFO advisor does for companies. Now, if you think of a chief financial officer, CFO, their job for a company is to take the numbers, the operational numbers, the financial numbers, and make sense of everything and create strategies for the company to help the company grow and be more profitable. And they are not the head accountant. Their role is to be strategic. And now, if we look at smaller companies, a lot of times the smaller companies don't have the resources or they don't need a full-time CFO. And so this is where the fractional CFO advisor comes in. And what does that mean for a small company, a smaller business? It means someone that's helping you make sense of your financial numbers because as an accountant, I prepare the profit and loss, income statement, balance sheet, and I give it to my clients. But I'm not in a position to where I can actually help them create strategies or make sense of what happened because I'm more of a record keeper for them. My main goal, my main job is just to make sure they stay out of trouble with the IRS. And so now shifting to this fractional CFO advisor, I'm in a better position to where I can help my clients with their cash flow management. I can take their financials and we can start projecting based on this, based on your forecast. This is what your cash flow looks like. And one thing we often get so hung up on is net income or taxes. And that blinds us from cash flow, which is very important because cash flow is how much money you actually get to take out from the business. And then the other thing that fractional CFO does is it helps you improve your profitability because you can increase your top line revenue, but at the same time, if your profit's not increasing, or then there's no point in just increasing the revenue. You need to be more strategic about how you increase the revenue. And then also help with financial planning and analysis. Again, this is more forecasting, future forward looking work. And the biggest thing is holistic business advice. So we take everything you have, your P&Ls, your starter market data, your operational data, your labor statistics, your housekeeping costs, your payroll costs, supply costs, and we look at everything from a overall, a big picture view, just to see, okay, how much is each room really costing you? Are you making money? If your ADR is $75 and your actual cost per room sold is like $79, and you're not making money, you're actually losing money. And then we start pinpointing where are you leaking money from. And so this, I'm going to show you a quick free financial assessment I do for clients just to kind of give them an idea of the numbers. And this is a free complimentary financial assessment that I do. If you're interested, please let me know. So I'll just kind of walk you through the different numbers and metrics and things that we look at. And so this was a financial assessment I prepared for a Comfort Inn and Suites. The very first thing we looked at was we just compared the revenue for current year to prior year. A lot of times when you're looking at the hotel statistics reports or your P&L, you look at revenue, but it's not broken down by month, or you see current year versus prior year, and then you just move on. But now if you look at it month by month and just kind of compare, okay, so for example here, in the current year, our revenue in May was significantly higher than it was last May. And then it drops in June, July. And so then we start digging into why did this happen? Is it the market condition or is it something at the hotel? And so that's the revenue analysis we do. And then we also kind of do a breakdown by statistics because your revenue obviously is made up of a function of occupancy, ADR, room sold. And so here again, we look and see, okay, your occupancy was down about 2%, and then your ADR was consistent. So having 2% less, you sold almost 1,000 rooms less. And then we look at the operating profit. So this is very important because this number tells us that for every dollar you made in revenue last year, you lost 3 cents in actual money. In the current year, for every dollar in revenue you're making, you're losing 15 cents in actual money. And so then we start digging into why or which expenses are higher. And so then we want to take a look at the profit per room sold. So here, I talked about this in the beginning. Now in the prior year, your ADR was about $84.55, and your cost per room was $86.93. So you're losing $2.38. But this year, your cost per room is a lot higher. You're $97 per room sold. and you're losing almost $13 a room. So why is that? And so as owners, as managers, we don't look at these fine details. We just look at uh, the big numbers, the totals. We don't get into the details. It's important we get into the details. And then we break it down by function, by expenses like payroll. So now we see here, payroll was quite high this year, almost 14% higher of revenue. And then supplies was pretty consistent. And then your overhead, which is everything else, your insurance, your property taxes, um, repairs, maintenance, and all that, pretty consistent at 70%. And then if we look at the overall net profit, this is just taking into consideration other income, miscellaneous income expenses. You had about 5,000 last year in miscellaneous income, 11,000 this year. And so cash flow is a very important number. This is a big number. You want to look at cash flow. So what cash flow tells you is actual how much money did the business make. The profit does not tell you actual how much money came in and out of the business. And so here, if we look at here, we started last year with $127,000 in the bank. The operations, the actual hotel operations, we ended up losing $13,000. And then we ended up doing some renovations, so $150,000 in renovations. And then we positive $53,000 means we took on some loans and increased our cash flow by taking on debt. And then here the draws, since the owners were not able to take out money, it's zero, or they did not have to put money in, so it's zero. So the actual cash flow for the year was a negative 109,000, and you ended the year with 17,000. Now, if we look at the current year, similar, our operations this year actually has lost $146,000 in cash. We spent 16,000 on other assets, and the big number I want you to look at here is this 105,000. That's saying that we had to put in 105,000 as owners into the business, and so with that, our negative cash flow was still 45,000, which means we paid out more in expenses and other payments, and so we ended currently ending at negative 28,000. So we're overdrawn. And now, one other big number is our number of months of expenses in the bank. We don't usually look at this. This just assumes if we were to completely shut down collecting revenue, how many months of expenses can we sustain of our fixed expenses, pretty much. Last year, 0.2. That's not good. You at least want to have 3 to 6 months worth of expenses sitting in the bank as a safety net. Current year, negative 0.3. That's not good at all. And so these insights give the owners some information on how they need to be more conservative with their cash, or maybe if they need to re-strategize as far as their debt structure, or focus on revenue or sales marketing. And then this is another one that we look at is the star report analysis. So we just kind of look at the market, see, what was your index, how much did you approximately lose because you did not capture your entire market share. Same with ADR. So like in this example, in the prior year, we only had 95% of our market share. If we would have captured 100%, we could have potentially increased our revenue by 47,000. And this 47,000 is based on 3% more revenue, 3% more occupancy times our ADR, which was 86. And then $86 ADR, and again, we had a 95% market share. If we would have captured 100%, we could have gained 52,000 in revenue. And so we had some room there. And if you look at these numbers, just gives you an idea of things you can improve. And I'll give you an example how just by making some tweaks to maybe your ADR, you can improve your revenue and cash flow. So we do some what ifs. This is part of the financial planning and analysis where let's say if you did increase your ADR some this year, it's an 11% increase. So we're saying we're just going to increase our ADR and not do any increases in occupancy, and therefore our payroll and supplies and overhead is going to stay consistent. And so you see, just by increasing ADR a few dollars, we're able to significantly increase our operating profit and also our cash flow. $47,000 profit versus $47,000 loss versus $158,000 loss, and then $65,000 cash flow. And this is also considering $105,000 from the owners. But if we would have had this kind of revenue, maybe we wouldn't have put in $105,000. So what do I do? Now, I hope you have a high-performing and more profitable hotel. And you get your own CFO, who is me, that specializes in hotels, and we meet on a regular basis. And as a CFO, we track your profit, cash flow, we analyze your company's financial strengths, weaknesses, and propose corrective actions to work on. And we do this every month so that your hotel is and stays financially on track. And you and your team will know exactly what to focus on every month to have a more profitable hotel. And you'll finally understand the financial health of your hotel and what to do about it. And in that way, you no longer have to be in this by yourself. I am there, my team is there to be your go-to financial guides. We are here for you. And it's a monthly process which we get to working to get to know you, your goals that you have for your business, your personal goals, and we set profit and cash flow targets, and we put together a plan that's designed to improve the profitability and cash flow of your business. And then each month we do a assessment. We analyze your business and financials to determine what's holding you back from making more profit and cash flow. And we also give you a simple one-page scoreboard that shows you what's going right, what's going wrong. And then here's an example of the scoreboard. And so we have it color-coded. Red means you need to focus on it. Green is you're okay. Yellow is just kind of watch out for it. And we update these on a regular basis each month as we do your analysis. And with the action plan, we provide you with a short list of the most important next steps that need to happen within the next 30 days so you can stay on track to hit your profit and cash flow targets. And again, we are there. We'll come along your side. We'll be with you every step of the way. You're no longer in this by yourself. We are here for you. And the fees for this, how does it work? And so we set it up to be very simple. The fees are service is a flat monthly fee of $10 per room. This includes your profit, cash flow target setting, business assessment, scoreboard, action plan, unlimited access to us. And the ultimate goal is for you to have a high-performing asset and a more profitable hotel. And best of all, there is no setup fee, no contract, and you can cancel anytime. So if I can help you with your profitability, cash flow, or if you even want just a free financial assessment, please feel free to reach out to me. I'll be more than happy to help you out. Again, just contact me if you have any questions. Thanks for watching.